All right, ladies and gentlemen, I hope you had a wonderful day. It was the last trading day of October, and although the month was very spooky, today wasn't that bad. We actually closed green 2 days in a row. Now, tomorrow, we have Powell and a lot of things, but I'm not moving on that quick, man. You know why? Because the month of October was red. I thought it was going to be green. The seasonality of following the down August, the down September, I mean, you failed. The fact that we did not go up, this puts 2023 in its own historic calendar, and now you have closed 3 red months in a row. The last time this happened was March of 2020. So, Chad, Powell tomorrow, everything we got to talk about. It is all tied into this because we talked about this pivot point. We're ending the month here, and although the month of October is red, and that's surprising people even like myself, this pivot point of 4,200, this is where things come to rally and come to die. And now you have Jerome Powell tomorrow, and there's a couple of things that can happen. So I got a breakdown for you. I'm going to share with you my expectations. It is kind of simple, but if you understand the context into tomorrow, then you will be prepared a little bit more. Why do I say that? Because last Fed meeting, September 20th, that is what set off all of the fireworks leading into the end of the month. That dot plot, everything that went on and everything with the rates and people expecting things and the bonds, it was all wild, and it culminated with the whole Israel-Palestinian conflict, and now we are reacting here today, or at least into tomorrow. So, Chad, I hope you're ready for all of it. I know, I'm just getting excited. Drop your thumbs up on the video. Make sure you're subscribed, and if you don't know, we are live Monday through Friday, 30 minutes before open, youtube.com/thestockmarket. We will see you there in the morning and in the afternoon. We will be streaming Powell live. All of this will be live tomorrow so we could get the data and respond to it in real time, baby. Run it.
Walking to the couch, it's a 2020 election. Live in the hills, but I still get a spread. Started with a live, but I still reinvest it. Feel how I feel, then you feel like a blessing. I just want the lesson, I just want protection. I'm up and I'm down, but they sound like progression. Farmer never plans if he waits for perfection. Finger to the down.
All right, off the bat, ladies and gentlemen, before we talk about Powell, we have to understand how we got here. The first thing I need to tell you, and it's very important, is that we already paused. September 20th, that was the last Fed meeting. If you have heard the phrase on Wall Street, sell the last rate hike, well, that was the last rate hike. If tomorrow, which is priced in that he will not raise rates, if they go ahead and not do that, that will be 2 pauses in a row, 2 Fed meetings of no action, and that will be your confirmation that, well, the Fed has paused. So this will relate into what Powell's going to say, but you may have heard me bring this up once long ago in the past, and I said the confirmation of him pausing will be when they actually pause, and well, that's what we're dealing with. But this is very important because the whole, okay, maybe people start selling stocks, the economy slows down after the rate hike, well, we're kind of getting a crash course in that over the last month since the last pause, and now tomorrow we get to revisit Powell. So that is number one. But thing number 2 now that you really have to understand is what was the market doing leading into this whole decline since July, and what was Powell worried about? And one of those big things was oil. This is the oil chart from the end of July, and you can see we're working our way up, and then boom, this is the end of July. From the beginning, you were at like $66, you end at $80, and then even by the end of or middle of August, you're at like 84, and then by the beginning of September, 85 all the way to $95. So let's take a look at the market, and I'm sure you could see it, but oil's going up, the market was going with it. But by July, as oil starts going up, economic data starts getting very, very good, you start watching the economy react to the whole bond. It's not even the economy, it's the stock market reacting to the bonds and what's going on with the economy being good, and then tie that in with oil shooting up from $60 to $95. what were people worried about? Inflation coming back, and then quickly out of nowhere people start getting worried about the economy and that things tighten too much because of the financial conditions, and then you get the rate pause finally as things are developing, and then sure enough, right around here, where is it, October 6th, you get the invasion of Israel and Palestine, or again, Israel, the attack that led to all of it. Again, I'm thinking Russia, Ukraine, there's so much going on, but this is so important because this is the context leading into tomorrow. Powell is aware of some of this. You last heard from Powell at different moments, and this has been how we have got here. It hasn't been just all about the war. It hasn't been all about just hitting a level on the market and momentum. It wasn't just about bond yields, what set off the bonds. Don't forget you had oil and all of these different things going on, the data, the earnings, and people are like, yeah, the economy is really good, but then they're like, wait a minute, some of this inflation stuff is going back or coming back, and then it led to a chain reaction. So we've already had Powell once in the middle. A lot of things have changed now since then. So now that we have that out the way, what do I think Powell is going to do tomorrow? Well, believe it or not, I think Powell will be surprisingly hawkish tomorrow. Why? Because I think a lot of people forgot the context. So what I'm saying is that leading up into all of this, before we were worried about the war or financial conditions or the bond yields getting a little too crazy, even around here, the issue that we had was, hey, oil's starting to go up. Maybe all these other inflationary factors come back, and then the economic data. Powell was worried about that, and this was his reason to say, okay, maybe we're pausing now, but this is also the reason why tomorrow he's going to make it very clear that, hey, I will raise rates if inflation comes back, and, he is not going to stand by, and he does not want to signal that he's done, even though this will be now 2 meetings in a row of actually pausing. So that's why I'm saying initially, I think people are going to take that as surprisingly hawkish. They're going to respond to Powell now discussing what led us up into this, and I think that's what's going to get people off guard. Then they're going to start listening for things that are new. But the overall thing I will tell you is watch Powell's attitude. You've watched enough of this man. He's going to try to play neutrality, and honestly, there's something that happened today that maybe that neutrality may not bode well. Maybe we'll get surprised tomorrow, but generally speaking, you know how he plays the game. You know how he'll try to say a little bit. If he's going to say something good, he knows what he's saying. He knows if it's going to be bad. He knows that the market will respond preemptively to the things that he is going to bring up. So quite simply, he's aware of the financial conditions. He is aware that they've tightened. We've even heard a little bit from him in between the last month or so since we've last got the last hike. Or the last pause, excuse me, but like I'm saying, just watch his attitude, and specifically watch if he talks about financial conditions. That is the word that you want to be looking out for tomorrow. Specifically, you want to watch for when he discusses long-term rates affecting financial conditions. If he's saying tomorrow that the long-term rates actually need to go up a little bit more to affect financial conditions to guarantee that inflation doesn't come back up, then we're going to have a problem. That will be very negative tomorrow. If he says that he's pleased with long-term rates, tightening up conditions, and that supports his case for not having to move, the markets are going to like that. I think the situation of financial conditions, that may become an issue in how Powell discusses it, because once again, bonds are lower, or AKA yields are higher since we last dealt with that. And you remember back in October, even back to June, May of 2022, FCI, Financial Conditions Index, all of that, that was a very big deal to Powell and a lot of market watchers, but it makes sense because bonds are actually tightening up a lot of things, and then we're seeing that in a bunch of other areas. So all in all, I think Powell is going to say the same speech. He's going to make it clear he is down to raise rates if inflation comes back up, but at the same time, I think he is aware that financial conditions are tightened, and we're going to see if that buys buys him time until the next SCP in the end of the year. I don't know if he's going to hammer home the dovishness like he has at the beginning of the year, or if he is now going to try to let it ride. So now that brings me to my final point. It was the other part of what you saw today. Remember, we were talking about Bank of Japan yesterday. There was that rumor they were going to tighten, and sure enough, Mr. Ueda, he made a half-a attempt at, altering it by saying, well, we'll raise the upper bound, but not fully abandon the YCC, just made a slight tweak. Now, here's the weird part about it. Although it would be good in theory, and that makes it so that it would support the yen and all those other things, and it shows that he is making a step towards actually abandoning yield curve control, this was the worst day for the yen since April, and now you got it going through one of the bigger lows. It doesn't look like much, but you could even see here the yen, just like the bonds or the stock market, it was at those lows. Now it's back below there, but it had a rally. It was holding up, and then sure enough, when things started slipping here, this was the last time I even believe, again, it was Ueda making one of these slight adjustments, and you had the reaction. But what people were talking about today was that he kind of got a crash course on not doing enough or looking like he's kind of trying to please the market. He played this 50-50 game, and then the yen got punished for it, and now you're either going to have to see another reaction, or they're going to have to deal with a lot more craziness going counter to the goal they were trying to accomplish. So that's what I'm saying. Maybe Powell's neutrality tomorrow backfires like Ueda, or that slow pace. I doubt it, but for the most part, I'm going to be looking at what he says towards financial conditions, and I think him saying longer-term rates, easing them, or if he really does say we need more of that, I think the markets will be hypersensitive to that, and that should be our driver amongst all other things. And then before you know it, it's Apple earnings the next day, and then we close out with the non-farms. And oh man, I was going to get into the plays, but don't forget, also in the morning, an hour before the bell, you're getting the JOLTS jobs openings. That's going to be able to move the bonds. Obviously, the grand finale will be Powell, but then you are going to hear, again, two factors on the bonds, that bond refunding and whether or not that bond supply is going to the short end or the long end of the curve. So we got a lot of action tomorrow. I hope you're there and ready and live for all of it. But now, let us get into the plays. So, right off the bat, I got a couple of different plays that I want to look at. I will start with the easy one, AMD. They missed on earnings, or they missed on guidance, beat on this quarter, and then they rocketed right back up. It's a very interesting reaction given it's only 2%, but it was on comments about data centers and what they're doing with AI, and I think they're going to have an AI conference on December 6th. So, in the grand scope of things, I want to see how the data moves them tomorrow. We haven't really seen a high-profile earnings do this. The last one was Amazon, where they had that little drop in pop. So we'll see what happens, but some of them have failed, like even Meta or Microsoft. So want to watch how that one plays, and even in general, you've been getting a lot of mixed results from out of the chip makers, some with different materials doing better or worse than others. So we'll see what happens there. And even NVIDIA this morning, there was news that they were going to lose $5 billion in orders from China due to the recent AI chip regulation. So watch out for all of that. A lot of action there. That is play number one. Play number two, I want to tell you Apple because that is important, but no, I am going to tell you PayPal. Why? Because they have earnings now the day after this. I made that play on it. I'm going to bring it up here again because we were talking about plays that have the pin and some names that really haven't moved much, but unfortunately, PayPal's moved a lot, and this could either be a blessing or a curse because now if they have a big earnings move, it just gets back to the previous low versus some names, last time when they're pinned, they have a good earnings, it's rocketing up and getting them back up to their second level that they were at. So if it's already reaching a new low, some of these are going to have a big test, but I think a lot of eyes will be on PayPal. Some of these smaller names, we have seen them surprise. I think PayPal's in between gigantic and small, so we'll see how they perform, but watch out for them. That's play number two. Then play number three, this one, be careful. I saw it around this price earlier, then it started running. I missed it throughout the day, but we had the news bright and early. But Beam, they sold some licensing unit to Novo or Eli Lilly. I think Eli Lilly related to, GLP drugs, but overall, they got a good response off of that, and a lot of biotechs have been killed, and a lot have been the outperformers. Pretty much a general amount of biotechs, any XI or XBB company in that nature, they all got murdered, or the IBB. But then if you go and look at some of the names that are holding up, they would also be biotech or the random random healthcares that have been doing very good or have been outperformers. So this one caught my attention, but Beam, I don't know if I want to play. Some of these have been very, very clap-worthy, so you got to watch out. But that is play number 2. And then finally, play number 3, watch out for some of those pin plays like we talked about. So we brought up net this morning or this afternoon. This is one where I'm saying, you could see the pin hasn't really moved too much. Even if you start to pull it out, it's not entering in that new zone, and it's still kind of in the recent range of those highs. So I don't have an option play on this. I hope you use the criteria. I hope you use some of what you've learned to maybe find a play and take it upon yourself if that works for your budget and everything else. But this is definitely one that we discussed, and it has that criteria. Another one, not really related to the pin, but this was big news today, and just watch how it plays for earnings. But Zillow, and their chart is interesting when you do pull it up on the daily, but they started dropping out of nowhere. There was news related to a case of the jury finding like Zillow and other like realtors guilty of like commissions, but I think it was for the realtors, not all real estate agents, and a lot of people don't know the difference. But even then, it was interesting to see that they had a negative reaction than like GPCR, or no, that's the Ozempic one. It was like CSGP. Yeah, I almost forgot that one, but they went up, and they're related to real estate, but every single real estate name got squashed. Just watch to see how this develops, either up or down. I think it could be an opportunity, but generally speaking, you're going to have way more to focus on. There's still a couple of big earnings, Apple and everything else in between, but big data in the morning, then Jerome Powell, and then we see the make or break at 4,200. So I hope you're ready, but that is your watch list, ladies and gentlemen. Make sure hydrate, healthy, ready to go. Make sure post your watch list. Make sure we see you there in the morning. I need the armor on. I need the helmet shining. And I need you to remember, what are you doing it for every day? You already had your end of the year. It's now the new year. Yes, welcome to the cult. But what are you doing it for? Remind yourself every single day before you do it, because then the motivation will let you know what you really in for, baby. And that'll let you know whether or not you got unlimited energy. I'm telling you, do it for the right reasons, baby. Stay locked in. Remember why you started and take that into the finish. But Chad, get ready for the fireworks. I love you all. I'll see you in the morning, all throughout the day. I'm sorry about the early end today. That was weird. GG. I got it. I know. It's just so weird. I love you hard.